Hi there. We're here with one of our mentors from MacroMentors, Russell Clark, and we're going to talk a little bit today about what Russell sees as his outlook for 2023. Russell, do you want to give kind of a brief introduction of yourself, and then let's get going with the
outlook? I managed a hedge fund from 2006 through to 2021, so 15 years. And I often sort of started with looking at how the macro world fared together, and then looked at where people's expectations were wrong with the macro world we lived in, and then tried to take advantage of that. And then last year, 21, I sort of stepped back from markets because the way the world used to work wasn't working the same way anymore. And so I needed to have a think about what was happening, why, and whether we could, make any reasonable predictions about the future. I've been doing that. I have a Substack, which you're welcome to look at. Just Google me and you'll find it. But I think, I can start to see how the world is changing and what that means, I think, potentially for investing or asset allocation.
Yeah, we were talking before this about there is this kind of shift away from maybe a kind of more monetary-led world, which is a little bit more mean reverting, towards a more kind of political, fiscal world. And I know that you've kind of been exploring that in your work. Are there any kind of conclusions that you've drawn from that?
Yeah, look, one of the big surprises in 2021, which really sort of drove home to me that we were living in a political world more than like an economic world, was suddenly China came out and enforced all these regulations on its sort of large tech companies. And the perceived wisdom at the time was that these were the champions, Chinese champions. They were going to get Chinese support, government support, and they were going to be this sort of beachheads into sort of conquering the world, or the rest of the world, ex-US and its allies. And then suddenly, out of almost sort of left field, they go, actually, we don't really like you guys. And they basically sort of, especially Alibaba's the sort of linchpin, but they destroyed them. And I was thinking, that is really odd. Not odd, but, it just seems so counterintuitive. And, there's been a series of, I would say, counterintuitive Chinese policies since 2016. And, it sort of made me think, well, I really need to know more about politics to really be investing here, which is why I sort of stepped away from it. What I'm starting to see, I think, is, we're getting into a sort of political game where a lot of the rules that have existed no longer exist, or are ignored, because we are moving away from a globalized world where we basically, it was very simple. Guys like me, guys like George, we just sit there and go, who's the lowest cost producer? Who's producing the best product? We buy their shares. It's listed in China. Doesn't matter. Buy their shares and they're going to do great. And that was it. And now it's more a question of, okay, is this company going to get political support? And it's not even like, are they going to help, promote US or Chinese interests? Are they also doing doing well by their employees? Are they paying their workers enough money? Are they contributing to society? And even other issues which I think about now is, what is their tax position? How they pay tax? And is that likely to change? And you try and, so it's become a much more complicated area. And, I've been trying to work out, where that's going to go, how that's going to go, and how that's going to affect asset prices. And it's a very interesting area, I think. I don't know if that makes sense. Do you want to, anything I want to clear up, or do you want?
Yeah. I think one of the things that I see is we are entering a world where there's real competition for kind of resources, financial flows, and as everything kind of becomes deglobalized, or to some degree deglobalized, that kind of seems to be exposing lots of vulnerabilities in the system. So, we may enter a system. I know a lot of people have been quite bullish energy and quite bullish on the commodities. And in a world where, everyone suddenly commits to doing their defense spending, or everyone commits to fiscally expending on renewable energy infrastructure, you're going to bring the kind of, you kind of get to the end of the road on not having enough capex to do it. And you have like competing kind of trends where you have kind of ESG versus political will, let's say. And I think we've seen it a little bit in the bond market kind of more recently, where as you kind of fiscally spend, it kind of doesn't work with the old disinflationary trends which kept the status quo. And as a result, kind of everything has had to adjust. I know one of the areas that you've obviously looked at is food. What's your outlook? How do you think about that from here?
Yeah, so so I've been developing that, and I think I've actually even gone a bit further from where I've last written and what you probably have read, George. But I've been thinking about, when I try and summarize it into its simplest, I've talked about a pro-labor shift. So we've had policies that have been pro-capital, which are naturally deflationary. So they're efficient allocation of resources to the most efficient user of them. And what that does is also it gives more power to capital or corporates. So the power to set wages, the power to try and keep everything, prices. So if you think about commodities or inputs, which include interest rates, which include wages, as a corporate, you want to try and get those as low as possible, while you want to try and get your selling price as high as possible to get profits maximized. It's a very simple idea. But all you got to do is if you include labor in that idea of inputs, right, you can see how capital is against the interests of labor. Now, when you keep wages low, right, it makes it very hard to have a commodity bull market. So if people can't afford to fill a tank of petrol, they're not going to fill a tank of petrol. So demand will collapse, and you'll get pricing weaker. And now what I'm seeing sort of is that we are moving, politics in the West and in China and elsewhere is moving to a more pro-labor. It's often called populist because it's popular, but a more pro-labor, let's give people more money type policies. And I think it's being driven by a secondary aspect to this sort of pro-capital, pro-labor, is that pro-capital eras tend to also be naturally empire-creating eras. So if we look at the previous pro-capital era, it was really the rise of the British Empire in many ways. It became the first globalized economy. It was a leading economy, it had the leading technology, and monopolized trade in many different areas, and controlled the commodity trade from many different areas. And that empire fell apart really through the world wars, and particularly after World War II, as it lost the monopoly or power, political power over large chunks of the globe. And that was actually a naturally very inflationary era, right? So if you're going from one state, which is generally controlling, the flow of assets, right, and generally all the profits are flowing to the Great Britain, but you have this the imperial sort of production would be deflationary, and as that breaks apart, you can understand how that becomes much more inflationary, because each separate union wants their own taxation. You got different interests that need to be satisfied. And so when I look at the world now, what you can see is like we have a sort of US at the center. All trade is conducted in US dollars. You can see that through the ability of the US Treasury to basically regulate out of existence any listed company or any transaction it doesn't like. And you can see on the other side of that, countries like Russia and China trying to resist that. So for me, there's two different things going on here. One, I think naturally inflation is going to go higher because basically with labor wants more money. That's fine. There's nothing really wrong with that. The bigger issue of whether the US can sustain this empire that's built is actually much more interesting. Because if it can't, then what you should expect is the US dollar and US inflation to be way, way higher than it is today. Because a lot of the sort of framework that's kept it together is going to sort of start to dissipate. That one I don't know about. That one's a much more difficult one to judge. But I see these two different trends going on. And yeah, it's intriguing. I find it very intriguing. But I definitely think what you're going to find, if there are two big consensus things that I would trade against in the markets for 2023, which is what it's about, is A, I don't think there's going to be a recession. And I also don't think inflation is going to be lower. I think inflation is going to be strong and get stronger.
Okay. Yeah, I would say that, like, one of the things that you're definitely seeing is that there's a dichotomy between what's happening kind of on the street. You go to the pub and it's full. You go to the restaurants and it's full. And you look at the capital markets and they say kind of like quite different things. On the food angle, the thing that I actually think is quite interesting is, like, people are kind of like fully bearish the UK. Currency terms, everyone's kind of thinks everything's terrible. If you look at net migration plus kind of trend birth death rates, the UK population has had its largest year of population growth since World War II, and sort of the post-World War II era. And many of the people who've come across are, let's say, kind of refugees who've come from parts of the Middle East or parts of Ukraine. And, I see lots of people make an argument that, like, they're not particularly, like, on initiation, they're not the most productive members, like, of society. But the one thing that they obviously all have to do is eat. And when you look at, food inflation in the UK is like 16.5%. And I don't see if that flow of people kind of continues. Like, it's very hard for like an island to adapt quickly to that. And I think that's actually probably happening the whole way across Europe, where people have taken different people in, people are having to, and lots of kind of supply chains are having to be rerouted. And that actually keeps quite an upward bias on certain food kind of groups, why that exists. The US trade seems like it's a bit more of a kind of widowmaker, maybe the new JGBs. I think people have been trying to, let's say, cool the top in the kind of US system for, I would say, a good 5-6 years. I think there's this kind of TINA argument that's happened, right, where there's no other alternative assets. I think I would probably argue on a personal level that, as more countries spend fiscally, the opportunity set tends to open up within these countries, which gets rid of that kind of TINA bias. And, one of the countries I was talking to you very briefly before this about is Japan. And, it seems like there's like pretty big shifts going on in Japan. They've recognized that China is a kind of systemic threat to them from a security perspective. And they are now kind of committing to spending a lot more money on defense. They seem to be opening up on immigration to some extent. And there also seems that the wage negotiations in Japan are actually starting to favor, like you said, kind of labor over capital. I know you are one of the kind of specialists of Japan. Do you have any thoughts kind of there?
The more you specialize in Japan, the more you realize that you don't know really what's going on, because it's it's like an onion, layers upon layers upon layers. But certainly I think, the more than China, I think the Russian invasion of Ukraine and what that means, with China has probably really prompted, if you read about, Western powers are trying to support Ukraine, they literally don't have the ammunition or the munitions that they want to. I think just with the war in Ukraine has churned through most of the stores and reserves of weapons that the EU had. And so you suddenly realize, I think there was this sort of line of thinking that the munitions were really, last year's wars, and everything was going to be about a cyber war. And what the Ukrainian war, as far as I can understand it, has shown is that cyber war is something that just sort of is ongoing in the background, and you can strike here and there. But actually, it can't really cripple a well-organized country like Ukraine is. And so actually you do need boots on the ground. You need munitions, you need ammunition. And so I think that's really been the wake-up call. China's an interesting one because it doesn't have a history of invading people, unlike Russia. That is, and Taiwan, it's never perceived as a separate country. So, it's a tricky one. But Japan definitely needed to change. My expectation, if you're asking where my outlook differs to a lot of people, when people talk about countries like Japan or Italy, they basically think population is going to decline forever and they're going to end up with half their populations in 50, 60 years' time. I really disagree with that type of analysis. If you look at demographics, when workers and people don't have enough money, they don't have children. It's not that difficult a concept to understand. If you can't afford to feed yourself, you're not going to be going out and having kids, right? And so my sort of working assumption is at some point, if this labor over capital theory is correct, you're going to see a big increase in birth rates at the same time. When people feel secure in the earnings and income to be able to have a family, I think that's definitely where we're going at some point. And so, Japan has definitely changed. I mean, the big surprise, really has been the weakness of yen. It's made a cheap country even cheaper. Generally, when I give people advice, I say go on holiday in Japan as soon as possible because you don't know how long it's going to be on. It can stay this cheap. But we're going. For me, sort of when I look at the world, if you accept this pro-labor, it sort of means like if you look at what wages have done since the 80s, for most countries, in real terms, they've barely grown, all right? Whereas asset markets, property prices in the UK or stock market in the US have done phenomenally well in real terms. So my basic view is those two things are going to reverse. Wages are going to do well in real terms and assets are going to do poor in real terms. And I think bond yields keep going higher. And so it makes it very tricky for investing. Most assets don't look that attractive to me. Yeah. Oh, and just one love. The other thing with food inflation, you're talking about.
Sorry.
Just the big driver for food inflation for me, it's not really population movements in UK or problems in Europe. Yeah, it's that China, I think, is now becoming very dependent on overseas production of food. It's domestically, it doesn't have the land or the people to grow the food that it needs. And so it's becoming more reliant on outside food sources, which actually sets up this intriguing dichotomy in China in that they need to become more open to the rest of the world, while the US, which is now fully self-sufficient in energy, doesn't need the world at all, right? And so this is the thing is that, it's difficult to see China as like taking over the role of the US as a sort of central power and the central currency. But if you look at its demands for commodities and demands for trade, China probably needs to fit that role more. And that, whether they want to, can get there, or the US helps them by continuing to sort of militarize the US dollar as a sort of a military asset. Who knows? But these are the bigger issues I think that are going on in the background.
How do you think about, obviously let's say your thesis is labor over capital, so stickier inflation, worse for corporates and kind of financial assets. And I think we see that trade kind of playing it out roughly at the moment, right? Whereas lots of stuff which was based on very low rates with discounted cash flows is done really poorly, and stuff which has kind of things that people in the real world would spend money on consistently, kind of good stuff has done relatively okay. When you put together a thesis like, I think there's going to be a pickup in birth, do you look at trying to express that kind of directly? Are you trying to think like who's going to benefit most if there's a big pickup in births? Am I looking actually at like clothing companies to do with children, or am I looking at medical to do with children, or you think about it purely from that's going to be an outcome of the inflationary dynamic or labor dynamic that we're in?
So far, it leads to sort of same conclusion, which is that it's better for commodities, so particularly for food, and it's bad for bond markets. So you know that the spending will be there, and so the inflation should stay stronger. The really interesting thing about it, which I haven't been able to find the trade for, is so if you look at the country with the best demographics, Western or wealthy developed country with the best demographics is Israel. Israel has more frozen embryos than all of the US combined. So basically, they offer it's sort of offered within the sort of NHS there, and they don't really destroy these embryos; they're just sort of staying there. And so what you see is so typically when people talk about Israel, they go, "Oh, the very, very Orthodox Jews are the ones having all the babies," right? And that's why their birth rate's so high. That is the sort of the view people give you, particularly Israelis themselves will say that. Then they see that as a problem. The super Orthodox Jews don't join the army, so that's also a problem. But what Israel does is it breaks out birth rates by religiosity. So you have sort of not particularly religious Jews, and then more, and even the VC Tel Aviv living, cappuccino Chardonnay sipping Israelis have birth rates way above what you see in Japan, Korea, and elsewhere. And what I'm trying to say, and again, it still comes back to this fiscal policy is talking about, is governments can make any outcome they want happen in reality. If you look at the power that government has, so if you could offer much more generous paternity leave. You could, like I said, in my view, somewhere like the UK could transform its birth rate probably overnight by offering to freeze every 25-year-old woman's embryos for 20 years. So that, because what you see in the numbers is it's not the age of the mother that's the real factor on births, it's the age of the egg. So if the egg is 25, it doesn't matter if the mother's 45, you're going to have a much more likely to have kids. And then you can look at things like maternity, paternity leaves. There's a whole range of things. It's just whether governments want it. And actually, probably more importantly, and this is why I try and stress to people, because finance guys don't like politics. They don't like to look at polls. They don't want to talk to people so much. But what really matters is who's got the votes, right? And if the votes are there, then the policy will happen. Yeah, that's where the power is. And so the sort of bigger thing I see is China's pushing up food prices, and that's creating this pro-labor swing in the Western world.
Yeah, I think the big takeaway from COVID is the things that you didn't think were possible are possible if there's political will behind it, and power is I always think about it as there must be something pretty good about being a politician, because they put up with quite a lot of nonsense, but they all seem to want to stay in power forever. So the power must be quite conducive. And when they think about, or when politics becomes an angle, there isn't a real consideration to supply and demand or anything in play. The factors probably start at power. Can I achieve it kind of democratically? And then it's how much is it going to cost? What are the other, negotiations I have to make to get this through? And I think you always see this, I think especially in the States, something arrives and it gets watered down and everyone takes their kind of nugget of power as it goes. But it does feel I think the cat's out the bag now, right? Where the old response used to be market down by bonds, recession by bonds. Yeah. And I think what will start to happen is it'll be market down, kind of bond by bonds, but the big one will be anticipate the fiscal. and what are they going to put the money into? And I think once the cat's out the bag on these things, and populations have proved that they like it. People seem to like the free money in the States. People seem to quite enjoy furlough here, and people don't have quite short memories about inflationary pressures and things like that. That the game is going to change, and the distribution of assets. I think I've been writing a little bit about this. That the distribution of asset returns might change quite a bit. So, in a world where you have kind of fiscal support for goods and services from the state, the probability distribution for commodities shifts right. And for bonds, you go from this disinflationary trend where you're actually probably slightly more in a middle ground, if not with an upwards bias. Foreign exchange as a default probably has a much larger range to trade. Because the financial flows don't just become so dollar-centric, right? They become like, oh, this person's fiscally exploding. The monetary policy tends to stay relatively the same everywhere, but like the fiscal could really vary between different regions, and I think that's going to create incredible opportunities for kind of more macro assets than kind of. And I think that the final side of that is, it's been very easy to have kind of singular opinions, right? It was like dollars going up, dollars going down, stocks are going up, stocks are going down, bonds are rallying, bonds are not rallying. And actually, like the dispersion, I think that you're going to start to see in those things is quite meaningful. Probably just at the point where the market is fully allocated the other way. Everyone's long indexes. And what you're starting to see is that the returns between all the different stocks is growing like enormously. And I think that's probably quite a large factor of like some of the things that you're saying, right? Where like all the things that are going in are changing, capital versus labor is changing. And some companies, let's say if you take stocks, have crazy pricing power within that. And they don't have enormous wage bills, and they don't have like crazy leverage. And there's other companies that do. I know one that you've kind of talked about publicly that you think is quite interesting is McDonald's. Maybe if you give us a kind of a run through there, and then we'll kind of wrap this up.
Yeah, look, McDonald's is an amazing business. And so, the amazing thing about McDonald's is it's much more high-end outside of the US than it is in the US. An amazing business, but its model essentially, and has gone from being both operating restaurants and franchising them to almost purely franchising. And when you franchise, the incentive structure for the corporate is one of just pure growth. We just want to grow open stores, and the profitability of those stores is really quite secondary. We just want to grow them because we then take a royalty from each one that's open. And McDonald's is interesting as it used to not do that, because when the first business model first started, the franchisees used to get very upset when McDonald's would push ideas that grew sales but didn't grow profits. And so they say, okay, look, we run our own stores, so we won't do that. And they've gone. And when I look at them, and to be honest, I need to do more work on this, but from what I can see, why McDonald's has done very well, and in fact, all the franchisors, so the top companies, all the franchisees have done very well, is that you're seeing huge sales growth from delivery, online sales. But as far as I can tell, those delivery sales are not profitable. All right. So when you factor in the cost of, some guy taking it and delivering it, it's not profitable. It grows sales, but it's not profitable. And so when we look at the listed franchisees out there, they're all losing money now. They're all reporting sales growth, but all losing money. And so what I'm seeing is, I think, what I suspect is going to happen is at some point, either via the franchisees or via the government, the big companies, the franchisors that are listed, are going to be forced to give some of that money back to either their employees or to the franchisees, or both. And what we already see is that the FTC has re-engaged this action against McDonald's. So when you sign up to McDonald's as a franchisee, the contract says you cannot poach from other McDonald's franchisees, all right? So you have to hire completely new employees, or maybe you get them from, I don't know, Burger King or somewhere like that, but you can't hire other McDonald's employees. What the FTC is saying is that this is actually limiting the bargaining power of McDonald's employees. So let's say you trained up at one place, you're quite good. There's other places, we'll hire you. We don't need to pay for the training. We can pay you $3 or $4 extra. And they're saying you stop them from doing that. So I think that's why McDonald's looks in trouble. The other thing as well is if you read the reports to Congress on, and actually, I don't buy the big issue very often, but I always buy a big issue around Christmas time and read it. It's the big issue in London. What you can see is a big issue is that a lot of large corporates don't pay their full-time workers enough money to afford food at the moment. So the big issue in the UK was highlighting that BT food call centres have food banks for employees, which does strike me as quite egregious. McDonald's is the same. McDonald's is often highlighted as a company where full-time employees can't afford food to feed themselves, and so the pay is too low. And on the more cynical side of it, when people look at the franchisees, one of the reasons they said, well, they think McDonald's franchised is that they know these stores are unprofitable at comparative wage rates. So they do is they franchise it to someone, and then they work for free or get their family to work for free to make them profitable. And I think the government is coming out to stop that. And so for me, the profitability of these stores, these businesses, I think is greatly overstated, but only from a political point of view. If you look at how politics and the contracts are set up today, they are fairly valued. They are not shorts. But what I think is if the politics changes, and I think it is, the value of these businesses is greatly overstated. McDonald's itself has a negative equity because it's been buying back shares at very, very high valuations for the last 4 or 5 years. And that's pretty much true across the whole sort of fast food spectrum.
Yeah, the bit of McDonald's I'm always actually amazed at is that they seem to be pretty much the only people on the high street who manage to monetize all 3 meals. When I look at the kind of like in England you have like Manger and places like this, they seem to have done really well at getting breakfast and lunch, but they don't get the kind of breakfast, lunch, dinner. And, where I live in London, McDonald's is fairly busy from 8 in the morning until kind of 3 a.m. They've picked up this kind of like the kind of drunk card clientele as well. So I guess they're at kind of saturation of as much as they can sell, and delivery has been the new kind of thing. I do actually, we used to know someone who worked for one of the large delivery companies, and he said that they were unprofitable on every delivery. And you've actually seen Deliveroo have just pulled out of Australia. So I think there probably is some funding pressure there. So in summary, if we were to kind of sum up your view, it's, there's not going to be a recession next year. We think that capital over labour is ending, and labour is now going to get a bigger share of the pie. That's going to kind of keep an inflationary trend kind of going. And that's kind of coupled with this increasing presence of politics, which you believe is going to, over time, potentially lead to a kind of a bit of a baby boom. And that's going to show up most within kind of the food markets. And that's going to create a kind of more challenging environment for financial type investors who've made kind of money, kind of been long, I guess, risk parity over the last decade or kind of couple of decades. Thank you so much for talking to us. If people want to follow you, obviously people are able to talk to you on MacroMentors. Russell has a product on MacroMentors where he kind of helps you on how to raise capital, and has had a number of calls with us. If people want to follow you on kind of Twitter, or Russell has a very good Substack, where should they look to let them know?
Substack's easy to find. Just Google Russell Clark. You should find me, but it is www.russell-clark.com. Super easy to find. And that's where I am at the moment and where I write all my ideas. It helps me think, if more than anything. So please find me there.